with the video.
All I heard from all of these other analysts out there and these economists is that inflation is going to 2% or under within a few months, and everything's going to be perfect. We're going to be singing Kumbaya together with a perfect soft landing. Well, the data doesn't confirm that, guys. And that's really what I want you guys to understand, is that as we jump into this chart right over here, all right, so again, what we're looking at here is the past CPI data. So this was your CPI right here. This was food, and this was energy. All right, now what this shows us is that in the last 12 months, energy collapsed while food went higher and the rest of goods went higher as well. Okay, now what this shows us here is that essentially energy was the main culprit for why the CPI data has come down so substantially. Now, the reason why that's important is we have to go over here. I want to go over to this chart now, and we're going to take a look at energy. Let's see what energy is doing here. And I'm sure a lot of you guys have an inkling on this. So if we flip over to the daily chart on energy, and I got lots of trend lines on my charts here, but look at the move in energy. This is oil. This is WTI crude oil. And crude oil has gone up from basically $68 to $79 just in the last month. If you go back to the previous levels 12 months ago, because remember, the CPI, guys, is treated as a 12 month, so year over year, and a monthly, month over month. Well, month over month, inflation's skyrocketing where the energy component is, right? So we're going to look at food next, all right? And then we can also look at housing. But right now, the energy component is skyrocketing month over month, and it's almost back to where it was 12 months ago. Now, do you want to know why? Why did the CPI drop so much from 12 months ago? Why are all of a sudden the CPI numbers down? Because think about it. 12 months ago, oil and gas were at ridiculous levels because of the Russia invasion. So it makes sense that, again, as we got past that big pop in oil and oil started to come down, the CPI would come down. Well, now we're at a point where we're past that initial Russia invasion where energy spiked higher, and therefore we're going to see the CPI numbers not drop as much, and in fact, likely you will see an uptick this next coming CPI data on inflation. And the reason I'm talking about this, guys, is because it's going to make sure that the Federal Reserve has to stay basically hawkish. They have to continue to stay vigilant because they know this data. They're looking at the same charts I am. They know that this stuff is going to go higher.
Following the Federal Reserve's interest rate decision, Bitcoin's price showed a notable short-term recovery as it successfully surpassed the $29,000 resistance zone. Despite recent fluctuations, several analysts remain optimistic about Bitcoin's long-term prospects, asserting that it is still in a bull market. This sentiment is supported by the fact that many long-term holders of Bitcoin are still holding positions that are currently profitable. According to Ali Martinez, despite Bitcoin dropping below $30,000, the adjusted SOPR indicates that most BTC sellers are still making profits. It's similar to selling items purchased at a discount. Taking to his Twitter handle, he wrote, "Even though hash Bitcoin fell below $30,000, the adjusted SOPR suggests that many of those who are selling $BTC are still in profit. Think of it like people selling items they bought at a discount. Don't let short-term price action blur the bigger picture." According to Don Crypto, Bitcoin is experiencing its lengthiest period at or below the weekly 200 moving average. The previous record was set in 2015, lasting approximately 9 months. However, the current situation has surpassed that, with Bitcoin staying below the weekly 200 MA for over 13 months now. This extended duration could have significant implications for the cryptocurrency's price and market sentiment. Credible Crypto said, "We've been repeating the exact same pattern with every single accumulation consolidation structure since our bottom at 15K. It's almost time for the next impulse." Kai-Young Ju, the co-founder of CryptoQuant, believes that Bitcoin is still in a bull cycle. One of the indicators supporting this view is that approximately 71% of the realized capitalization of Bitcoin has remained unmoved for over 6 months. This data suggests that long-term holders are holding onto their Bitcoin, resulting in low selling pressure in the market at present.
Last chart I want to go over here real quick, guys, is gold. And again, gold continuing to do exactly what I thought it would do. So this is a classic technical setup here. Take a look, pivot high. This was a double top, by the way, or double top was here. You get your big pullbacks on double tops. On triple tops, which was this hit, small pullback. and right to the scene of the crime. Pivot high,